Okay, so for this question, it asks what did he mean by the non-bank financial system? So basically, you need to know that the non-bank financial system is basically referring to the shadow banking system. So shadow banking system basically refers to something like the investment banks, the money market, mutual funds, the hedge funds, and other firms that are part of this shadow banking system. So that's the reason why it's called non-bank financial system. It's not related to commercial banks. Okay. And for B, let's see. The question is that what is a classical type of rent, and why was institution in the non-bank financial system vulnerable to such a rent? Okay, originally the classical definition of bank rent is a situation in which many depositors simultaneously decide to withdraw money from a commercial bank. Okay, so that will lead to kind of bank rent. Okay, so institutions in the non-bank financial system, that is in the shadow banking system, were vulnerable to a rent of this time for several reasons. Let's think about for one reason is because we're not closely regulated by the government agency. So, for example, the Federal Reserve, right? So the Federal Reserve need to regulate the commercial banks, but not those like shadow banking systems. Okay, so Congress had not authorized the Federal Reserve to act as a lender of last resort to these financial firms. So the reason why they are vulnerable, the first reason is because the Fed has no rights. The Fed has no rights to control them. And the other reason is because they are not for those for those in the shadow banking system. Depositors are not protected by the Federal Deposit Insurance Program, so not protected by the insurance. So that's the reason why for the non-bank financial system, they're vulnerable to this kind of like classical bank rent. Okay, so for C, let's look at C. C say that why would deposit insurance provide the banking system with protection against rent? Okay, so this kind of deposit insurance is a way to reassure depositors that their deposits are safe, even if their banks goes out of business and has no money to pay back. Even in that case, the Fed will pay them. So in this case, it's kind of like deposit insurance system will significantly reduce the likelihood of bank run and protect the depositor.